The following is a paid program, and the views expressed on this show do not represent the views of WJZ-FM, Entercom Communications, its sponsors, or affiliates.
The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Hello, I'm Brian Akers, and welcome to Winning in Retirement. I'm a certified financial planner practitioner, and so is Alex Monk, who is our special guest and special person we have on the show this morning. Good morning, Alex.
Good morning, Brian. I'm glad to be the special guy for you today.
Well, I didn't know how to use special person in the right way. I mean, because Alex is a very special person. He's a brilliant guy. He's been with Akers Financial Group over 9 years. It's been a good time watching him grow in his career, and as a certified financial planner, you've been a CFP for, I think you got it a year ago now or 2 years?
I got it in 2016. This is my fourth year.
Fourth year? Man, life flies by when you get old like me. I started financial planning when I was 19 years old, and now today as I'm 23, not actually 53, it just flies right by. Now, what we got to do today in this show is we want you to win in retirement. We don't want you to get caught up in all the noise that's going on out there. A lot of the things that might sound extremely good, you might want to throw a lot of money into certain stocks. You need to have balance. Today's show is this. We got to ask you this question. How much of your retirement is guaranteed? Do you have guaranteed money? Guaranteed money, protected money, and income? How reliable is your retirement income plan? Are you truly prepared to have retirement and money that comes to you now and throughout your retirement years that you can count on? That is what our show is going to be dedicated to today. Alex, are you ready to talk about that subject?
Well, that's kind of a loaded question, Brian. There's so many aspects to that. I like it. That's like, that's a good one because there's so many different income flows in retirement, right? You have everybody's situation is a little bit different. Some have pensions, some have Social Security, some don't. Some have no fixed income sources, typically a little bit of Social Security. But a lot of people out there these days, they need to learn how to build that retirement income because it's really a game of cash flows. If you think just having a certain number, once you hit 1 million or 2 million, whatever your number is, you think you're good. That's not always the case because then you got to get it out and you have to spend it, but you have to make it last. There's a bunch of different aspects to it, and it's a topic I like talking about it because I do it every day.
Right. So this question, how much is your retirement is guaranteed? Now, this could be income calculation. How much of that money that's going to come in every month for your retirement years is guaranteed versus also how much of your portfolio is protected or has some guarantees to it. We're going to divide that question up throughout the show, but let's start out with how much your retirement income is guaranteed. Alex is talking about cash flow and how important knowing your cash flow would be in retirement years. Knowing where your money is going to be coming from is a very big part. Now, if your portfolio is designed with 100% stocks and your plan is to withdraw from the stock market for all of your income, we think that plan is flawed. Alex, what do you think of a 100% portfolio of stocks designed to take income from?
Well, so from what I understand, with stocks, you're supposed to buy them low and sell them high. And if all of your money is in stocks, they're typically going to move in the same direction. Stocks are not always up, so you basically can't always sell high. So that scenario you just said where you're all in stocks and you're withdrawing from the market, it locks in some forced selling for people. And that can be a bad thing. It's locking in the losses, it's compounding at the bottom, and it can really create what's a nasty sequence of returns. So you can think that, I'm only taking 3% or 4% out a year. If you're taking a little bit higher than that and the market goes down, you can take out 10, 15, 20 And then you got to make more than that back the next year, plus whatever you need for income. So it's a really, really tough mathematical equation. You can get lucky. There's certain scenarios out there where you can actually do that and it works out. There's a lot that don't. I mean, it depends. How risky do you really want to be with your retirement? Do you want to wake up and check the news to make sure you're going to be able to have a check that month if the market's up?
Yeah. When you base your retirement on 100% stocks, what you're really doing is trying to withdraw, and you're basically trusting that stocks are going to make 6 to 10%, and you're going to pull out your 4. The sad part is in most portfolio withdrawal scenarios that we've seen from some brokers is the fact they withdraw at a 7 to 9% rate, because they don't just buy 100% stocks. They buy preferred bond offerings, convertible bonds, convertible stocks, things that are going to give higher yields. So they chase yields as a form of funding retirement. And so we believe that to be even riskier when it comes to creating an income and cash flow. We truly believe in balance, and that balance has to have a portion that's protected. If we look at your cash flow and where your money's going each month, we look at what your income is, that from pension or from Social Security. A lot of people don't have pensions anymore. So we got to create our own retirement money by saving throughout our careers and letting that money grow and grow and grow until our retirement years. Then we need to slow it down as we get closer to retirement and to make us organize this portfolio of different types of assets to be able to give you the retirement income that you're going to need. Knowing your cash flow, your income needs are very, very important. But the main point we're trying to make right here is this. If you are trusting a risk asset for all of your income, you need to rethink your planning. The planning has to be from bottom up. The bottom up means the guarantees have got to lay out a guaranteed portion that you need to support your basic needs in life. Then you can take some risk with the other money. You need to have money in the market, but not all of your money. So there is a balance. Have you seen lots of balance in the way we design retirement plans, Alex?
Yeah, I mean, that's pretty much our bread and butter. The theory being, why not take more concentrated risks with some of your money when you have your base needs, sometimes with an escalation in it, but that guaranteed income flow is taken care of. So it doesn't matter what the market's doing. The market can go up, the market can go down. It's not going to affect your income. It's not going to affect your monthly check if you have the right balance. And it allows you to do a lot of things which I think are awesome. Like, you can pick and choose where you want to take your income when you're doing the planning for the next year or 18 months. If the market's up, great. Let's sell some from there. If it's down, great. We have other places to go. We can wait. And that's the key. You never want to be in that forced sell situation. That is a terrible position to be in.
Yeah, the forced sale would be, let's say you had a market crash like last in 2020. Back in March, April, the market went down 30, 35% over a 2-week period. And let's say you needed money to pay bills, to do things that month. Or maybe you're on an automatic withdrawal program where the portfolio is 100% in stocks, and then they send you a check every month. So they're selling stocks each and every month to provide for your income. We believe that that is a plan that will not work for the long term. We believe that you need to have a plan for your income that is going to be designed in an entirely different way. Part of the ways that we do this is we try to see where your money's coming from to start. The money, like Alex mentioned earlier, was your pension and Social Security would be some of the sources of money. And then you have your portfolios, and you have to decide a lot of big things, such as when to start Social Security, when to take out of IRAs, 401ks, retirement plans, and really deciding the when, the where, and the how. The retirement income that we try to design for people is this. We want it to have a protection or a guarantee level. Guarantees can come from banks, which is FDIC insurance, or from insurance companies, which is backed only by their assets. So the more stable insurance company you use, the better when it comes to their guarantees.
Right, and they're rated based on what amount of assets they have on hand versus what they have promised. So unlike a bank, an insurance company has to have more on surplus than it's promised, whereas a bank has the federal government backing it. So we take it very seriously when we're looking at insurance companies. If we're going to use them for, our safe, our protected side of the portfolio, they must be A-rated, right? You don't want to have any risk on your non-risk side, if that's what we're going for. So it's very important to make sure the company's solid, and then know what you're using it for. Have a plan. Some people just sell whatever the product may be on their chair, but that doesn't fit for everybody. There's so many different things out there that you can really get creative and make it do what you want and have it address your concerns. Some people, they're worried about living too long. Some people are worried about long-term care. You can combine all those different types of things into an income plan if you take some time and think about it and plan it out.
Right. The retirement income plan has to start with you, the client, your unique financial situation. Our solutions come like this. We use fixed annuities for certain pieces of a portfolio. Never all of the portfolio, only a portion. That portion is derived by figuring out the actual plan and the needs that you have. We do look at your budget. We look at where your money's invested, the allocation, the portfolio, bring it all together. So to be winning in retirement, we think we have to have a reliable, sustainable income. And that can come through the use of income riders on fixed annuities, where we can design income to come from a guaranteed annuity that's guaranteed by the insurance company. These all come together to formulate that income we need and that we're going to live off of for today and to our future. So retirement planning, when you talk about having a guaranteed income, is a very important piece to know, do you have it? How's it going to work? And is it the right amount for you? At Akers Financial, we're local, we're independent. We don't report to a big company on Wall Street. We report to you. We have offices in Farmville and Lutherville. This is all about retirement, not about us. You need to begin winning in retirement. You can give us a call at Akers Financial Group to schedule your free meeting. Call us at 833-WIN-RETIRE. That's 833-WINRETIRE. When you call, you can leave a voice message, and Susan will call you back on Monday to schedule a phone appointment, a virtual Zoom meeting, or rarely right now we're doing mass-to-mass in our offices, but we can set some of those up soon. Start planning your retirement now by calling 833-946-7384 or visit AkersFinancialGroup.com. Can you protect your low-risk investments? We will answer that question in a moment.
Akers Financial Group was founded on the principles of integrity, trust, and service. We believe each and every client is unique and deserves advice and implementations that apply directly towards their personal financial fingerprint. This financial fingerprint tells us the objective risk tolerance and purpose of the investment and insurance tools that we use to assist our clients in reaching their goals. By discovering the purpose of each financial decision, we can help you accomplish your goals. Intelligent financial design starts with a detailed balance sheet and cash flow to know where to start. This leads to a financial decision that will allow you to reach your goals with your risk tolerance in mind. Our relationships begin with an initial consultation and grows with each meeting. We would be thrilled to work with you and begin your planning process. Call us at 833-WIN-RETIRE. That's 833-946-7384. Or visit our website at AkersFinancial.com. Member FINRA SIPC.
The choice of your child's school is vitally important. Wouldn't you go a few more miles for something really special? I'm Brian Wilson, principal of Harford Christian School. Harford Christian is an independent school in northern Harford County, serving students in preschool through 12th grade. Our Uncommon Core makes all the difference. For nearly 50 years, we've partnered with parents in the important responsibility of training children in God's truth. Our biblical worldview stands in stark contrast against today's culture. At HCS, political correctness is never prioritized above God's unchanging truth. We hold the bar high as we prepare students to serve God's kingdom, not just the workplace of man. Affordable tuition and transportation options put the choice of Christian education within your reach.
Come visit the longest established Christian school in Harford County. You can become acquainted with us through a private tour or on the web at harfordchristian.org.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers. Here with me today is Alex Monk. We're both certified planner professionals, certified financial planner practitioners. That means that at Akers Financial Group, we serve our clients by beginning with financial planning. That financial planning then leads to implementation, where we invest the money, we insure the money through different types of investment vehicles. We also do insurance analysis and design, and we are agents in those ways. So at Akers Financial Group, we design the plan and then implement the plan, and then we monitor that plan throughout our clients' retirement years. Today's show is this: how much of your retirement is guaranteed? Do you have guaranteed money, protected money, or income? How reliable is your retirement income plan? Alex Monk, what I wanted you to do is try to answer this little question for me. Can you protect your low-risk investment? What do you think of that?
I think you absolutely can, Brian. And, the way that we like to do it is through fixed or fixed indexed annuities. And they all have that nasty word, annuity behind it that everyone hears and they're like, oh no, I hate those things. And I go, oh yeah? Why? Right. And then they say, I don't know. So there's a bunch of different kinds out there. There's some good, there's some bad, just like anything. Let's just say that most variable annuities are not great, and then we'll move on. An immediate annuity is something you do in kind of a worst-case scenario, or if you're scared of running out of money. So those are the two kind of extreme scenarios you won't see much of. And then we have fixed, which is basically a CD issued by an insurance company. So they'll say, hey, give me your money for 3 years, and I'll give you, let's call it 2% for those 3 years guaranteed. Now, the withdrawal penalties are a little bit higher than a CD, so there's a little bit more time commitment, or I guess holding you to your time commitment more so. And for that, you get a premium. You're going to do about double usually what CD rates are doing. And then from there, you have fixed indexed. So fixed means it can't lose, it can't go down, but the interest is not guaranteed. It's tied to an index. And they've come in all shapes and sizes. It can be a 1 year, a 2 year, a 3 year, a monthly. I've seen a 5 year index. There's all kinds of different things. But it all boils down to the interest is tied to whatever underlying index you pick. And you get some portion of that, either all of it, a percentage, a spread, some type of calculation. So you have the potential to do better than a fixed, somewhere in that, 3 to 5 range, average maybe. And it's a great way to take bonds out of your portfolio, because you're going to get similar returns. You'll have less volatility. You have less interest rate risk. And you get income guarantees. And that's the big kicker. Now, a lot of people out there, maybe even on the radio, will sell these annuities, and they'll use some slightly misleading information. And what they're talking about is an income rider. And that income rider is how you can plan for income, but it's not an actual return on your money. So you have to be very careful about what you're hearing. You need to know what you're getting into and how it fits. We like to use multiple different companies, lengths, types, so that we can ladder them out, similar to the way you used to do a CD ladder when the banks would actually pay interest. But having that guaranteed portion allows the rest of the portfolio to be as risky as however you want. And that's really kind of the mix that we use to protect that safe side and also make sure we know we have that core income flow with a certain portion of our money.
Right. So what you just explained in detail is part of the process of how we deliver the retirement income that will have a portion of it protected from losses, guaranteed from losses, or guaranteed to last a lifetime. Those guarantees is what we're trying to talk about today. So if you take a look at your portfolio, and the question is, how much of your retirement is guaranteed? Well, it depends. So what we do is we invite you to call us. You give us a call at Akers Financial Group, and that's 833-946-7384. You come in. You can be mass to mass. We can do a video call or a phone call. And what we'll do is this. We see where you are. You might have bought a number of things throughout your life. You might have bought variable annuities at different periods. You might have bought fixed annuities, and you might have thought they delivered certain things. What we do is we read those policies, those contracts. We look at where you are now, and we say, well, this is what you have, this is what it provides, and then we look at what is going on to then evaluate what is the best way to deliver income for you based on what you have and what's out there today. Today, we're at lower interest rates than we were just a few years ago. Policies that were sold 5, 10, 15 years ago can be better than anything provided today, depending on what you bought. Many times, policies bought in that 5 to 10 year range, when they renew, we found insurance companies are lowering their interest rates, trying to get you to move your money out. They're lowering what they call caps. They're lowering the interest rate internally. And so that leads us to make a decision on what is best right now. We've also found that older than 10 years, some of those policies have minimum guarantees of 3% inside. We've had some at 4 and 5 from the 80s and 90s. Those kind of policies have a core guarantee that is there and will stay there, and you should never get rid of those kind of policies. So if you have an annuity policy now and you're not sure how to use it, it's almost like having a stack of tools like I do, and I don't know how to use them. I'm pretty bad at it. Thankfully, friends of mine know how to use my tools. They can help me prepare and build. But when it comes to retirement income plan, I do know how to build that. I do know how to take what you have and build what you need. So what Alex is talking about is how we build it. Now, Alex is a builder. He's done a great job building a bathroom for you and your wife, right, Alex?
It's not quite finished yet, but getting there.
You can't use your bathroom yet?
So this is kind of funny, but I'm nervous to use the shower because I built it. My wife's been using it for about 2 weeks. So
Okay.
I'm not a builder by profession. I'll be happy to help anyone retire, but I fancy myself a plumber on the weekends, and we'll see.
Right. Well, and what happens is if we say do-it-yourself retirement, could have the same opinion. Where, let's use your example. You have the wife saying, "Oh, I'll go ahead and try it," and she doesn't know how you did it. And then you have you who know how you did it, and you're like, "I sure hope this thing works." We do not want a retirement plan that way. The retirement plan, when you make certain decisions, those are permanent decisions. Those are lifetime decisions, especially when you go in there and choose single life pension. If you came to see us, we'd say, hey, hold on a second. Don't be doing that. You don't have any other money providing for your family. There are so many important decisions when it comes to your retirement plan. You need to make sure you have a base income that's going to be guaranteed so that you then can go invest the rest. So imagine if you guys ever read a book by Jim Cramer, that book would tell you need to set up your core portfolio. You got to you got to make sure your money is invested in a way to provide for all your needs. Then he says later in one of his first books, then go out and invest in the stock market and invest in stocks and do some trading. You need to set up a portfolio, a idea of investments, a balanced portfolio of multiple investments with many of them non-correlated to stocks so that you can create an income that'll last a lifetime. When we're talking about guaranteed income, yes, there's something called an income rider, Maybe you don't really need to know how all that works at the moment, but what you need to know is what it's trying to do. If you elect a joint and survivor, or a husband and wife, a joint survivor benefit, that'll mean that if it'll create an income, it'll calculate how much money it'll pay out. That money will go from today for as long as you both live. So if you have a fear of outliving your money, this is a way of doing it. It's different than annuitization in that an income rider, if we die too early, the money that's left over will then go to our heirs. If we live too long and we've used all of our bucket of money, it'll keep paying as long as we live. So designing a retirement plan, you have to look at what's the possibility of outliving our money. 55% of Marylanders, just a few years ago, a survey said, are going to run out of money in their lifetime. How do we prevent that? By creating a retirement income that will last your lifetime.
Yeah, and the time to start that is now. You want to start that plan now, because if you wait until the day that you think you want to retire and you sit down and you don't get the answer that you're looking for, it's not going to be as fun as knowing, hey, in 3 months from now or 18 months from now, I'm ready to go. I know where my first paycheck's coming from when I retire. I know what I'm going to do. I don't know how long my wife's going to let me hang out in the garage. But, those are the type of issues you should worry about, not how do I get my money.
Absolutely. Knowing where your money is and how it works and how to use it is one of the best parts of retirement planning. Now, many of our clients have been very successful throughout their life. Great savers, great investors. And they get to that retirement plan and they're like, well, I need to bring in an expert to make this money last as long as I live, and to be there to make it last as long as my wife might live. So what we got to do is this. You got to make sure your retirement is built on your goals, your objectives. The actual best part of retirement is the fact that you get your time back and you're not the one having to figure this all out. You decide how to use the money. The advisor, the financial coach will come in and help you design a plan that's going to make this money last a lifetime. Time is the biggest thing we get back in our retirement years. We want that time spent on the dreams, the things that you want to do, rather than worrying about your money on a day-to-day basis. So to begin your retirement, give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, you leave us a voice message, and Susan will call you back on Monday to schedule an appointment with one of our team of advisors. Start your retirement planning now. Call 833-946-7384 or visit AkersFinancialGroup.com. Are some of or all of your investments protected or guaranteed? Understanding how this works can change your retirement future. More in a moment.
You are unique. Just as no two fingerprints are alike, each individual's financial situation is uniquely their own. That's why the Akers Financial Group's team of advisors begins each relationship with a proven process that identifies your financial fingerprint. We'll guide you through a series of steps designed to provide a complete and accurate snapshot of where you are right now. Everything we learn about your financial fingerprint will become part of a detailed financial plan created especially for you. We'll never give you a cookie-cutter proposal or suggest a one-size-fits-all portfolio. The financial plan takes you from where you are now to where you need to be. Begin by discovering your financial fingerprint right now by going to getmyfinancialfingerprint.com. That's getmyfinancialfingerprint.com.
Member FINRA SIPC.
Are there times in some games you wish you could just turn on the TV at the 2-minute warning? Because that's the most important part of the game, right? As a fan, these are the most exciting moments. Your team could take home the victory or crumble under pressure. But when it comes to your retirement, don't wait until the last 2 minutes. So much can happen in the final working years before retirement. Whether you're in your 50s or 60s, near or already in retirement, there's still time to put a plan in place. Don't wait until right before you retire to begin planning for your future. Can you win the retirement game like that? Come in and talk with the team at Akers Financial Group. They've been helping families in Maryland plan for retirement for over 30 years. Call to schedule your complimentary meeting at 833-WIN-RETIRE. The number again is 833-WIN-RETIRE. Start planning for your retirement now. Call 833-946-7384. Member FINRA SIPC.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Yes, welcome back to Winning in Retirement. I'm Brian Akers. Here with me today is Alex Monk. We're both certified financial planner practitioners at Akers Financial Group. You can go to akersfinancialgroup.com and check out our website. At our website, you'll see a bunch of tabs up top. One of the tabs is webinars. These are designed video presentations by our staff of advisors and experts that we bring in from all over the country on many different topics. You can go to akersfinancialgroup.com and check out our webinar tab for information on things such as taxes, estate planning, investments. There's just so much more information there. You can also check out a radio tab we have and listen to any show that we've done in the past. So get to know Akers Financial Group by going to our website at akersfinancial.com. All right, Alex, we've been talking about how are you going to design your retirement? Is it going to have retirement income that's guaranteed? When we're talking about investments, one of the comments I made is, are we designing our low-risk investments to actually have low risk? And what happens is many people don't understand the risk involved in the investments that they own. So I thought maybe we'd just go over certain types of investments and what risks are involved in each and every one of them. So Alex, I thought I'd ask you an easy question. If I own a stock and I want to use that for my retirement income, what are the risks involved in owning a stock?
So you have market risk, the overall stock market, and that can go up and down. And then you have company risk. So sometimes the company could be in fantastic shape and the stock market just decides to go down. You're going down with it. What else you got in there? There's got to be some other type of risk in there. There's two.
Well, there's always political risk on every investment. A stock, when it comes to the market movements, they sway more with emotion than with scientific fact. What's crazy is that if you look back into the 1930s, the S&P 500, those stocks have performed extremely well on a corporate basis, making profits and earnings throughout all of those years. Yet stock markets can make 30-40% in a year and also lose 30-40% in a year. And that's more based on sentiment and fear of what's going on. Now, there's a lot of emotion going into the next year. That emotion can be tied to just as simple as freedom from the virus and from being shut down. When that day occurs, I think stock market might rise no matter what the companies are doing. So when you look at stocks, and if we're trying to design something that's low risk, stocks that can come in a version of lower risk would be stocks that pay dividends. But those dividend stocks will be companies that pay part of their earnings out to you, the owner of the shares. And people use that dividend to basically replace having money in like a CD making less than 1%. If your stock dividend pays 2 or 3, it feels pretty nice to get that check on a quarterly basis as compared to a CD that keeps lowering their interest. Stock dividends are not guaranteed. They can keep changing them, right?
Yeah, and sometimes they can stop, and that's an issue. If you own a company, just because it was a good company 50 years ago does not mean it's a good company today. And I see a lot of people come through the door and they're like, "Well, I got these stocks from my dad's dad, and I've had them forever, and let's just hope it wasn't GE that you were holding on to."
Right. All right, let's go into a second investment, and that is just the word mutual funds. I don't want to own those individual stocks. I have mutual funds. And the perception is by having a mutual fund, you have lower risk. What's your thoughts on that?
Well, so you do have lower risk through diversification, meaning inside of that mutual fund, you're going to own more than just one stock. typically in the 50 to 150 names, depending on what type of mutual fund it is and how big it is. The one risk you have sometimes in mutual funds is you may not know what's underneath the hood. It could just be a company name and some fancy name like new blah blah blah, or whatever they call the mutual fund. You got to know what's in it. You got to know, okay, just because I have 15 mutual funds that are all technology funds, how much of one stock do I own? That's what you need to look at.
Right. So I think it's funny that hot new investment, the new blah, 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 that hot new investment might be what everybody wants to throw their money at, and what they end up doing is buying at the last minute, buying at the wrong time. And that's not the goal for money that's designed for your retirement income. Today's show is about designing a retirement income that's guaranteed, that has some money that you can count on. We've talked about stocks, talked about mutual funds, and we're going to talk about the new person on the block, ETF, exchange-traded funds. Can you just explain some of the risk involved with those?
So an exchange-traded fund is similar to a mutual fund in that it's an investment vehicle where you own multiple equities or multiple assets. The difference between a mutual fund and an ETF is that the ETF is tradable all day long, just like a stock. So it's fully liquid. A mutual fund only trades once a day. That's 5 p.m. after the market closes. So you got to have all your orders in by 4, and then it trades at 5.
East Coast time.
Is there another time?
I know. It's not that funny. But generally, the ETFs have risk, and that risk is when you buy it, you get a collection of stocks inside the ETF. ETFs can be actively managed, which means that there is a manager that buys and sells the stocks, or it can be passively managed. What does passively managed ETF mean, Alex?
So that would be kind of like indexing, and that's a term we used earlier today, but it's also one you'll hear on the news when they talk about investing. It's these index funds. What that means, the fund itself is built to track an index. Let's call it the S&P 500. So whatever the S&P 500 owns, that mutual fund has to own. So essentially, that's like one way of buying the stock market overall, but you're not really reducing your risk just because you're owning all the names. The index funds they're kind of a weird one, because if the index that it's following changes its holdings, that fund automatically has to buy and sell. I don't think that's how you should manage your money. Based on what a benchmark says, that doesn't seem like the best way to pick what equities you're holding. So for me, I'm not a huge fan for all the money being in there, but I think they're a good way to pick up market exposure. You can get a lot of exposure, and it's usually very inexpensive.
Yeah, what happens in people's retirement plans is sometimes you have mutual funds choices, you have index choices, and then the plans are providing for many people target date funds. Target date funds are designed to take a combination of mutual funds and index and sort of manage it for you based on a stock to bond ratio. How does a target date fund, where it might have your retirement date, let's use the date of 2037 as a retirement date, and what that portfolio, what will it do, Alex, as it gets closer to that actual date?
So the target date funds, whatever company name is in front of it, right? Imagine that company is a parent, and all of their children, the good, bad, ugly, and different, they get a spot on the team. And as we get closer to retirement, that fund is supposed to shift more towards bonds and cash as you age. And I don't know how they do it, rhyme or reason, but they slowly scale towards what they call quote unquote less risk as you get closer to retirement. I just don't like that. How am I the same as everyone that wants to retire in 2037?
No. So what happens is a target date fund uses their formulas, their actuaries, and they come up with a logarithm of math. And they say, well, when you're 62, you need to have this portion. And then what happens is that usually it's designed by a family of funds, and they build a target date fund all around funds provided by that one family. And so you get every manager that they have, their good ones, their bad ones, all thrown into a portfolio that is piled up together. The fundamental problem I have is you're selling stocks as they see fit, not based on how the market's doing, and then they're buying bonds. Bonds, which in my opinion are at an all-time high because interest rates are very, very low. Can you go into deeper discussion on why bonds might be at an all-time high?
So bonds this is the one that tricks most people up when they go get their licensing. Bonds they trade inversely to interest rates. So as interest rates go down, let's say you already own a bond. As market rates go down, the value of your bond will go up so that its interest rate is equal to the market rate. Because the bond's already issued, they can't go back and rewrite it, so the bond will price up. And with that bond going up, it can only go up so far because interest rates have a floor, right? We haven't seen negative interest rates here, and I don't think we ever will. So yes, I agree with you 100%, Brian. Bonds mathematically can't go much higher.
Right, so what they're fundamentally doing in a target date fund is buying stocks or selling stocks at a high, which is okay, but then they're buying bonds at a high. If you're going to dial it back and go lower risk, we want you to consider something that's more protected, more guaranteed, something that's going to be there no matter what is going on with the interest rate market, up or down. We do see low interest rates staying around for a long time, but there will be a moment, whenever that moment occurs, when inflation kicks in and interest rates just have to jump. When that occurs, that's going to hurt bond values. No matter what low risk you might think they are, we could see a downfall. In any major crisis that we've seen over the last couple decades, bonds have been equally affected as stocks. From 9/11 to 2002, 2009, and even earlier this year, bonds dropped. Bonds didn't drop as much this year because interest rates were paying at the low rate, and because interest rates sort of held bonds up, I think, in my opinion. All right, so as we're talking about investing your money for retirement, we've been talking about protecting those assets. We want you not to worry about the actual money that you have. We want you to know your plan, know that it's designed for you. And that's what we do at Akers Financial Group. It's not too late to get something started for you and your family. Give us a call at Akers Financial Group to schedule your free meeting. Call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. Or you can visit our website at akersfinancialgroup.com. When you are retired, will you know where your next check is coming from? We'll explain after this.
Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement, Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678-356-1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services.
Imagine you're retired. You wake up in the morning and you don't even know what day it is. Every day seems like a Saturday. You can sleep in, cook a nice full breakfast without thinking about morning traffic or work deadlines. The Saturday calmness you used to crave is now your everyday feeling. You're not worried about your retirement income or how your investments are doing. Your biggest decision that day is where you're going to drink that first cup of coffee. Is that the kind of retirement you want? If it is, then sit down and talk with the team at Akers Financial Group. They want to help you get there. They've been helping families in Maryland plan for retirement for over 30 years. Call to schedule your complimentary meeting at 833-WIN-RETIRE. The number again is 833-WIN-RETIRE. Start planning for your retirement now. Call 833-946-7384. Member FINRA SIPC.
Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
You've been listening to Winning in Retirement. We're here in the fourth quarter with Brian Akers and Alex Monk. We've been talking about a very important subject to you that you need to think about. That is how much of your retirement is guaranteed. Do you have guaranteed money? Money that's protected? Income that's protected? How reliable is your retirement income plan? Have you been investing like you still have time to grow? Are you invested to retire? That's exactly what we've been talking about throughout the show. Throughout the different quarters of the show, what we've done is really talked about low risk and what that really means, and how low risk doesn't mean protected. Talked about interest rates and the effect on bond and bond funds. We also talked about guaranteed income and what kind of investment vehicles, such as fixed annuities, fixed index annuities, bank CDs, can provide guaranteed income, guaranteed interest. There's been a lot going on. If you want to hear the rest of the show, if you missed it, you can go to our website next week at akersfinancialgroup.com to the radio tab, and our show should be up there by Wednesday of next week. All right, Alex, you ready to go here in the fourth quarter?
Absolutely. I love talking about this stuff. I don't get it, but I love it.
I love fourth quarters because that's when the game is on the line. That's when your players come to play. That's when you win the game. And that's what we're going to try to do, is make sure people are winning in retirement. That takes a lot of advice and a lot of hand-holding at times and a lot of thorough evaluation of where people are, because we want their money to last a lifetime. No matter what is going on the outside, we got to make sure that money is balanced and diversified to do that. All right, so my question is this, Alex. Make sure, the question goes like this. When you are retired, will you know where your next check is coming from? Now, how important is this for your clients?
It's everything, and that's why we meet multiple times a year, so that we can continue to fill up the bucket for where we're getting our money. Because like we talked about earlier, if you're selling out of the market, you are opening yourself up to a huge risk, because if things go bad, you're selling at the wrong time, and that's not what you want to do. I always am thinking 12 months, 18 months in ahead, just so we can be prepared, and that makes us buyers when the market goes down. We're always going to have that balance so that we know where the check's coming from. We know where at least the next 12 checks are coming from. And then we're flexible.
Absolutely. So when the market's way down, we use fixed investments and cash to keep providing. We use fixed investments to provide a level of monthly income to meet that monthly nut, that basic bills that you got. We always have basic bills. It might be a few thousand, it might be 10, 20,000 a month, depending on what's going on in your life. We strongly believe in have a great financial plan so that it's built for you, built and designed for what you need. Your investments have to also be able to provide what you are talking about. We don't want an investment where you can lose 50% of it and then you're trying to take the same amount of income, because that's how money disappears quickly, is when you're eating the cake and you're trying to let it grow at the same time. You can't do all those things at the same time.
No, and especially if you use the cow analogy.
I started going with the cake analysis, but I'd rather go cow. I think cow's a better way of doing it.
Yeah, but if you think about it, like if you had half a leg cut off because you wanted a cheeseburger, it'd be a little gross. But I don't know.
Yes, very true.
But I think, Brian, the biggest thing is also if you know your numbers and they're not outrageous, like you have to be realistic. If you're spending $5,000 a month now, why would you want to have $10,000 a month to retire on? You just have to spend within your means and tailor your life to fit that, or you got to go make more money.
Now, our answer for the client is this: do financial planning, know your numbers, or at least have an advisor that knows your numbers. Then take those numbers to then design a risk tolerance and a portfolio that's designed to take the least amount of risk to reach your goals. Why would you take all this risk in your retirement years? Some people might get greedy when the market's doing real well and try to go all in. That's not the way to stay retired. That's a way to maybe lose some of your money. We don't want that. We want to have proper balance and diversification. Diversification will make that money truly last a lifetime. The importance of planning investments is this. You would save money your entire life creating a large portfolio of retirement funds, because we have to do it on our own nowadays. And then what happens in retirement is we turn it on. We turn it on to receive checks on a monthly basis. Those checks are going to provide the income we need to pay our fundamental bills. If we do not have a plan on how we're going to turn it on, we're sort of going to say, oh, I need a withdrawal, take some money out. You'll call whenever you need it. And that's not really the best plan. Planning ahead can make this money last a lifetime. So how much of your retirement money is guaranteed? It doesn't all have to be, but the basic core money should be. And that can be designed through guaranteed interest, using income riders of fixed annuities to provide. We rather do that than annuitize. Annuitization is where you give money to an insurance company and they guarantee a payment like a pension that ends when you end. It's not always the best thing for heirs, but it is a way of getting more income if we don't have much money saved. There are certain things you can turn on and get ready to use throughout your retirement years. What we try to do is truly look at where you are and make this money last a lifetime.
You know, one thing we haven't even talked about yet, Brian, but I think it's a hugely important thing, is the taxes. And if you don't know where your money's coming from, you're just opening yourself up for huge tax liability if it's not planned properly. So by having it mapped out, we can make sure that we're taking money out of the right accounts, the right taxation. We're watching our tax brackets, and we're trying to levelize taxation and avoid getting hit with those massive years of tax, especially if it's by surprise, because you can have penalties, your Medicare can go up, you can have all different types of things, and then you got to take more money out to pay the tax bill. So, you know, that's the other thing, and that's why we want people to come in, sit down, and, you know, the first couple of meetings, it's basically like going to Finance 101. We're just going to tell you what you got.
And I'm amazed by, no matter how sophisticated the person is, how good of an exercise it is to walk through where money is and how we're going to use it and to put it together. We found that the busier the people are, the more successful they are. It's an amazing exercise that truly helps them be okay and know that they're okay. And then they're comfortable and getting ready to retire.
Yeah, and that's the thing, is the comfort. I have some clients that they have more than enough money to retire. We have the plan, but they're nervous. And that's normal, because you know your life's going to change. But once you understand where your money's coming from, how the numbers work, you should be able to relax and actually enjoy what you've worked so hard for. I mean, it's not easy to work that long. I've only been doing it for how long, and it's killing me.
Works that hard on you? No, I think you need to find a job that you enjoy and you love and makes the years pass very, very quickly, in a good way. Now, the hard part is years pass very, very quickly. So if you're listening to this show and you're a youngster, you're one of those younger people, and you have a number of years to retirement, we want you to understand some basic things about today. As you get close to retirement, you're going to want to lower the risk. So the counter to that is, if you're younger, raise the risk. Invest that money, pour it in, invest. Save money. If you don't save that money, no one else is saving it for you. So retirement planning is about designing a plan that's for you, that has your name on it. It can have certain products in it, but it should never be product driven. It should be planning driven. So when you start with a financial plan, you will actually know what retirement income is guaranteed and where it's going to come from and how it's going to work. You need to have answers to those questions when people ask you. Now, if you're ready to design anything like this, you would come in and sit down with one of our team of advisors, and we'd go through where you are now, and then over a process of 3 to 5 meetings, we'll come up with the answer that fits right for you. How do you do that, Alex?
So the first meeting is just kind of get to know people and make sure we don't hate each other, because that's a big deal, right? This is important stuff, and I think that level of trust is there. And I always want to tell people more than they want to know, right? You don't want to see what's inside the sausage. Well, guess what? I'm going to show you. I want you to know everything. You can tell me to stop whenever you like, but I think people should know everything they can before they make a decision that has to do with their money. And once we get to that level, then we work through it together, show different options, address different concerns, and then come to the decision together. I mean, obviously help point in the direction, but it's the client's decision on how to design it as well.
Right, so we have clients that are very analytical and they design it and have everything figured out. They just want reassurance. And then there's clients that want to be taken care of. And those kind of clients, we do everything we possibly can to do everything for them with their design of Akers Financial Group. From our support staff, our servicing staff, our operations, our teams of advisors. We're there to help clients hold their hand in and through retirement. We're also able to help the analytical understand their numbers and exactly how to make things best. Financial planning begins with you and your unique financial fingerprint. Now, what's been going on this last year is many of you might be in a defensive mode. You might be reacting in a defensive way. It's like you're sitting on a sofa and you keep moving back and back and back, reacting. Reacting has the energy of being defensive. Creating, now that makes you sit up. You sit forward. You have the forward-moving energy of creating. The people who will get through this in the best shape are the ones who take this opportunity and this time to be in the creating mode, in the solution mode. It's a choice. We want you to win in your retirement by taking this opportunity to begin planning with us at Akers Financial Group. Schedule your free meeting. Give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, you leave a voice message, and Susan will call you back on Monday to schedule an appointment with one of our team of advisors. This appointment will be through a phone call, a virtual Zoom, or even face-to-face. We're not doing as many of those right now, but we look forward to those in the near future. You can give us a call at 833-946-7384 or visit AkersFinancialGroup.com. Good job today, Alex, and thank you, everyone, for listening. I'm Brian Akers from Akers Financial Group, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of Akers Financial Group. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated and investment advisory services through Kalos Management Incorporated. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Advice given on winning in retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Kalos Management and does not provide tax and legal services. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services.
The preceding was a paid program, and the views expressed on this show do not represent the views of WJZ-FM, Entercom Communications, its sponsors, or affiliates. Broadcasting from the Thompson Creek Window Company studios. High-quality windows at an affordable price. Direct from their local factory. This is WJZ-FM Catonsville, Baltimore. 105.7 The Fan. A Radio.com sports station.